Hello! Today we are doing the investment for beginners video. This is a video that I have been wanting to do for a very long time, but it has been taking up quite a bit of time in researching. So if you are super duper new to investment, there are actually a lot of ways from low to medium to high risk that you can engage in, and some for even you can close your eyes and invest and you'll still make money, which I'll tell you in a bit. So in this video, I'll be covering what you need to take note of before you even start investing. Secondly, what are the different types of investment with different risk level available to you if you are more risk averse or risk adverse. So before you even start investing, you want to make sure that you have paid off all your debts, or at least your high interest debts. Secondly, you want to make sure that you have enough coverage, protection coverage, or more like insurance coverage, medical, hospital. It's better to have than not. And lastly, emergency fund, which personally I feel that at our age, if you are in your 20s, is not very important. Okay, you know what? It's very important. Just save up 3 to 6 months worth of your monthly expenses as an emergency fund, just in case something goes wrong with your investment, and yeah, you have something to fall back on. The last thing that you should be prepared for before you start investment is really your mindset. For me, that's very important. When I just started to invest, when I put my money in, I kind of like assume that it's already lost. I mean, of course, it depends on which risk level or what is your risk appetite or what kind of investment portfolio you are looking for. But without further ado, let's go ahead with the low risk investment. If you're someone who is not very financially educated and you don't have the time and luxury to read up on Google and stuff like this, and you just want to close your eyes and still be able to earn more money than the normal savings rate, you might want to try government securities. Also note that in this video, if I'm giving any kind of examples, it will be from Singapore's context because I'm from Singapore. So I was saying government securities, you might have heard of T-bills or like government bonds. These are very super duper safe investments that you can make without really caring about it so much. So when the government wants to build a project or infrastructure in the country or wherever, they will need funding for that. And that's where you can go in and buy some of their securities. Like it can be treasury bills, which is usually within 6 months to a year worth of length that you have to put in your money into. And then there is like 3 years or 5 years or 10 years worth of government bonds that you can purchase. And according to Sidley, it's like a finance blog in Singapore, T-bills in Singapore, the returns is around 1.74%. A 3-year bond is around 1.92%, a 5-year bond is around 2.05%, a 10-year bond is around 2.32%. So government bills are very low in risk and is very perfect for those people who are very risk averse, but at the same time, of course, lower risk means lower returns for the most cases. And I mean, you are already going to close your eyes and sit on it, so I don't think we can expect a lot from it. Also, not to mention that it's usually super duper safe. It's very highly unlikely that the government bills or the government bonds will default. Default meaning the whole thing will be like, bankrupt, like they can't be able to afford to pay us back and stuff. The barriers to entry in purchasing these government bills and bonds are actually very low. You can start off from, I believe it's only $500 in Singapore. And they also have like coupon payments. Coupon payments means payments of interest every 6 months or annually or quarterly depending on the bills or bonds. Next up is low to medium risk, and that is ETFs. ETFs is exchange traded fund. It is an investment portfolio that constantly tracks a pool of companies. When you buy an ETF, they actually give you a small portfolio of many different companies in very small percentages depending on how much money you put in, and this is just like a more cost-effective way of, rather than you having to go into each company and put your money in. If you have learned finance, you'll know that the larger the portfolio, the lower the risk. And it's something like if you have portfolio A, B, C, D, E, F, G companies, maybe company A is not doing well and you're losing money holding stocks in that company, but maybe B and C, they are doing well generally, and overall you just cancel out the increase and decrease effect. So investing in ETF is usually low to medium risk. Of course, do your own duty. Next up, I want to present to you REITs. REITs pools money from investor to invest in a portfolio of income generating real estate assets. And what this means is just that when you own a percentage of REITs, that just means that you are entitled to earn a portion of the rental income from the property assets under the trust. They would usually give either quarterly, semi-annually, or annually payouts to the investors. For REITs, personally, from my experience, I would just focus more on looking at the industry and where's the geography. If you are buying REITs that are not in your local country, you might want to consider the currency risk, because that will really affect the share price as well. And I'm not gonna go into details in this video. So let's move on to, of course, the higher risk one, which is stock that everybody knows. Stocks are shares that you can buy on the market, and when you buy some stocks from company A, it usually means that you own a percentage of company A directly, and the performance and the risk index is higher than whatever investment types that I've said before, because if your share price increase or decrease is really based on a lot on the performance and the speculation of that company A that you're buying on. So I've covered government bonds, ETFs or index funds, REITs and stocks. There's this new thing coming out on the market, it's robo-investors. They claim that, you know, they are based on algorithm and blah 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 to put your money based on the risk index level that you have chosen to buy some stocks for you, and it's managed by a robot. I have a different belief. I went to this seminar and this, you know, investor veteran was saying that ultimately it's still run by some people at the back, and yeah. So in a way, robo-investor is very friendly for beginners because you don't really have to know how to invest, and you just have to set your risk appetite. I'm actually using one right now, it's called Stashaway, and I just started, so I will be covering more about that when I know more about it. But it's definitely an option that you can check it out if you are a beginner. Of course, the higher risk you choose, potentially higher returns you might be able to get, but it also means that potentially you might lose more of your main capital. If you have never invested before and you are super duper scared and you keep putting off the idea, my suggestion to you is just to slowly build out your risk appetite. Even though personally I wouldn't buy government bonds or bills just because I feel like the returns are little too low, and you might as well put in a higher savings deposit account. However, if you don't have that, you know, capital, because if you want to put in a fixed deposit account, usually they will require at least like 10,000 or something. You can choose to build out your risk appetite and start from government bonds first, and then slowly you know, upgrade into ETFs or index fund, or you go to robo-investors, then you try out REITs or you try out stocks. If you are very risk averse, you love the risk appetite, you are financially educating yourself online or wherever you are, you can just try to play around with REITs or stocks. or ETFs is also a good option for long-term holding. Always just do your own due diligence. That's very important, I feel. Yeah, and that's all for this video. A short introduction to you of what kind of investment types you can buy as like a beginners, or how to increase your risk appetite. Let me know if you want to make any kind of videos related to investments. Personally, I've only started like around 2 years ago, very slowly. So currently I hold commercial bonds, I hold REITs, I hold stocks. I also use a robo-investors. I've also had tried savings deposit account with like a higher interest rate. Yeah, let me know if you want to cover any of those, or you want a more in-depth review of a certain type of whatever, and I'll do it. That's all for this video. I hope you have learned something today. It's not too late to start, no matter how old you are, or no matter like what kind of things you are looking for. I don't know what I'm talking about. Okay, that's all for this video. I'll see you in for this time. Bye.